If SCHD is in your portfolio, something happened on June 29th that most investors barely stop to think about. Money hit your account quietly, no news alert, no fanfare, just cash, showing up like clockwork, the way it has every single quarter for 14 years straight. But here's what I want you to think about today. That payment is not just income. It is a report card. It tells you whether this fund is still healthy, whether your income is growing, and whether you are positioned to collect an even bigger check in September. So today we're going over the exact Q2 numbers, what they say about where SCHD is headed, the mistake that trips up new investors every single quarter, and the one move to make before September 23rd. Let's get into it. Before we go further, this video is for educational purposes only. I am not a licensed financial advisor. All data is from publicly available sources. Please verify numbers yourself and consult a qualified professional for your own situation. Here is what happened. Schwab officially declared SCHD's Q2 2026 dividend at $0.2525 per share on June 23rd. It paid out to shareholders on June 29th. That is the confirmed figure, not an estimate. Now, let's put that into real money because that is what you actually care about. 100 shares, $25.25 this quarter, about $101 a year. 500 shares, $126.25 this quarter, roughly $505 a year. 1,000 shares, $252.50 this quarter, just over $1,000 a year. And if you're holding a $100,000 position, about 3,100 shares, at today's price, that was approximately $783 landing into your account on June 29th alone. Annualized, that is over $3,100 per year from a fund that charges you 6 cents for every $100 you have invested. Now, here's the one thing that makes that number even more interesting. 1 quarter earlier, Q1 2026 came in at $0.2569 per share, the largest first quarter payment in SCHD's entire history, up 3.3% from Q1 the year before. So Q2 came in just slightly under that record. That is completely normal. SCHD's quarterly payments shift slightly based on what the 100 companies inside the fund are paying out at any given time. What matters is the annual trend, and that trend has gone up every single year for 14 years in a row. Here is the stat I want you to sit with for a second because I almost never hear it mentioned. SCHD's dividend has grown at 11.61% per year on average over the last 5 years. Not the share price, the dividend itself, the actual cash payment, growing at nearly 12% annually. To put that into perspective, at that growth rate, your dividend income doubles roughly every 6 years. So the investor collecting $3,100 a year today from their $100,000 position, in 6 years, if that growth rate holds, they could be collecting over $6,000 a year from the exact same dollars invested. No extra money added, just the power of a growing income stream. That is why long-term SCHD investors talk about yield on cost. They are not looking at today's yield. They are looking at what their yield will be in a decade based on what they paid and the longer they hold. The more the math works in their favor. Every quarter without fail, the same question shows up in my comments. Can you just buy a SCHD right before the ex-dividend date, collect the payment, and then sell? Is that free money? It is not. On the ex-dividend date, that's June 24th this quarter, SCHD share price dropped by roughly the amount of the dividend. The $0.2525 that left the fund's value showed up as a lower opening price. You got 25 cents in your pocket, and your shares were worth 25 cents less. Nothing gained. In a taxable account, it actually costs you money because now you owe tax on a dividend you never profited from. Dividend capture sounds clever. The math says otherwise. The dividend is a reward for holding quality companies long-term, full stop. Now let's zoom out because the quarterly payments is only part of the story. SCHD is up roughly 19% year-to-date in 2026. Total return including dividends. That is more than double what the average large value fund has returned over the same period. And over the past decade, SCHD has averaged 12.6% per year in total annual returns, income and growth from the same fund. But I'm going to give you the honest picture, not just the highlight reel. That strong price run has pushed SCHD's yield down to around 3.3%, compared to a 10-year Treasury currently sitting near 4.4%, and with markets now pricing in a possible rate hike later this year. SCHD's income alone is not beating the risk-free rate right now. That is a real trade-off worth understanding. Here is the difference, though. A Treasury note pays you a fixed coupon that never grows. SCHD's dividend has grown at nearly 12% a year for 5 straight years. In 5 years, based on that trajectory, SCHD's payment on your original investment could be yielding well above 5% on cost, while a Treasury bought today locks you into a fixed rate that could actually look modest if rates keep climbing. You're not buying today's yield. You're buying a growing income engine. SCHD at $32 is not the same opportunity it was at $24 in April. The yield is lower because the price has climbed. Someone who bought during that April dip locked in a cost basis that today's buyer simply cannot match. But here is what has not changed. The expense ratio is 0.06%, essentially free. It has raised its dividend every single year for 14 consecutive years. Its underlying index screens every holding for cash flow strength, balance sheet health, and sustainable payout ratios, which is exactly why SCHD held up better than most funds when the market got choppy in 2022 and again in early 2026. If your goal is a growing income stream you can eventually live on, a higher entry price slows early compounding slightly. It does not break the strategy. Dollar cost averaging, putting a fixed amount in each month, remains the most reliable way to build this position without trying to time an entry that nobody gets perfectly anyway. SCHD's next ex-dividend date is September 23rd, 2026. That is when the books close for Q3. Own shares before that date and you are in line for the next payment. Miss it and you wait till December. If DRIP is on, the June 29th payment has already started working. It bought new shares. Those shares will generate income in September. That income buys more shares in December. That is the loop, and every quarter you are fully invested is another quarter it runs without you having to do anything. Here is your action item. Take your share count and multiply by $0.2525. That is what landed in your account on June 29th. Drop your number in the comments, whether it is $25 or $2,500. I read every single one. And if your number is 0 because you are not in SCHD yet, drop that too and tell me what is holding you back. Let's talk about it right there in the comments. The Q3 breakdown is coming before September 23rd. Subscribe so you are ready, because by the time that video drops, you will want to already be in position. See you in the next one.